Well, thank you for joining me today at this week's weekly update. Before we get right into it, I want to talk about June 16th, our annual clay shoot to raise money for multiple sclerosis. The registration will be opening quite soon. If you have questions for future installments, make sure to go ahead and ask them here. And speaking of questions for installments, what is this week's? It is, what is your current outlook? And this question has been asked to me in several different ways about the economy, about oil, about stagflation. And people are looking for some answers. And I think I'm going to use a little bit more, a few more charts than I usually do to explain sort of a broader thesis on why we're not as concerned as I think people assume we must be. Let's start here. And some of these charts I've used before. Cumulative GDP. GDP is up 42% in the last 20 years. Gasoline consumption is actually down. So we're producing 42% more with virtually no new inputs from a gasoline perspective. As a percentage of people's take home pay, their gasoline consumption has really never been lower. So the US consumer is also least affected by it. It was a bigger chunk of people's paycheck 20, 30, 40, 50 years ago. Today it is a line item, no question, but it's the smallest it's ever been. If we look at oil consumption, I'm going to look at this table. It might be a little bit hard to read, but I'm going to go through some of these numbers that I think are key. The US produces 24.6 million barrels of oil. OPEC produces 34.6. That's OPEC. Iran produces 11. They're the second largest producer. The United States is by far and away the largest producer of oil in the world. Right? Russia is third with basically 10.7. But from a consumption standpoint, we consume about 20.7 million barrels of oil per day. China consumes 17, India consumes 6. We produce as a world 109 and consume about 106. That's incredible numbers. But we produce 4 million barrels of oil more than we consume as the United States economy. And by the way, this isn't a new story. In 1979, we consumed about that many barrels of oil. And our economy has grown considerably since 1979. Right? You have all the 80s, 90s, 2000, 2000. That's a long period. Our economy at the time was a little under 3 trillion. Today it's well over 30 trillion. And we use about the same amount of oil per day? Yeah, we do. That's been a huge shift. From an oil price standpoint, we've had very erratic oil prices. It seems to be, as I've joked before, it's always in a crisis. It's either too high or too low. In 2008, it was too high, and it was going to be $300 a barrel. And then I remember a few years later in 2012, it was going to be so low, it was going to crush the economy from being too low. It's not as big of an input as it used to be. The U.S. economy is a service-based economy. 70% of it is service-based. 20% is governments, and the last 10% is manufacturing. And even as a percentage of manufacturing, in terms of total inputs for energy, we have other varied energy sources: natural gas, wind, solar, and nuclear. Those have become bigger. Oil has been relatively stagnant. So, yes, have oil prices spiked up here recently? Of course they have. Nobody can say that, but we're still not even as high as we were during the Ukraine invasion. Why? Because although Russia produces 10.7 million barrels of oil per day, Iran produces, and we don't have as good of a data as we do, but probably somewhere between 3 and 4, maybe 3.5. They only export about 1 to 1.5, and 90% of that goes to China. So out of 109 million barrels of oil per day, taking offline 1.5, it just is not as big of a percentage as I think people assume when they hear some stats out there like 20% of the world's oil moves through the Strait of Hormuz. That's true. And I don't know if the strait is going to open or close, but I do know that the oil futures market in December is priced at about $76 a barrel, meaning the oil futures market very much believes that oil will start moving again in December, and oil prices will be lower by that time. Right? There's a lot of people expecting that future. From a gasoline price standpoint, I know people are talking about with high gas prices, you're going to have to reprice things. Well, let's look at this. We had a lot of inflation for a couple of years. In 2022, we had a lot of inflation. That's the blue line there is what's gasoline prices. Gasoline prices are a lot higher in 2022. Right? 2023, they were high. The green line there is 2025. That was last year. We were kind of at a record low period for gas prices. And the orange line is this year. It's come up considerably. We're basically $4 a gallon. It's high. It's not as high as it has been. Inflation adjusted, it's not as high. But again, it's not as big of a piece to the global economy. It's not as big of a piece as it is to the U.S. economy. It's still needed. It's still important. I don't want to shy away from that in any way. But it's about percentages. Speaking of percentages, one of the things I've been hearing is this has got to cause stagflation because we all remember the oil embargo in the 1970s. Well, there's a lot of things that cause inflation and deflation and stagflation, and you're right. Stagflation is basically caused by an outside force artificially raising prices during bad economic periods. Our economy is relatively strong. We haven't changed much of our outlook for our economic picture over the course of this year. But if you look at this, 1970s, 1979, 3% of our GDP was just us importing petroleum products. That was pretty much also true in 2008. No wonder the prices were so high back then. But today, we're net energy exporters. The whole landscape has changed. And 3% is a huge number, right, as a percentage of GDP, because that's your base input. So you're supposed to produce even more with that. But remember, the Great Recession was a 2% decline in gross domestic product. We were importing 3% of our gross domestic product in oil products. Today, we're not. We're not dependent on foreign oil. We're net energy exporters. We're actually sending things out to other countries because we're producing an extra 3 and some odd change million barrels of oil per day, more than Iran produces in the whole year, right? Including the stuff that it consumes itself. So again, putting these things back into perspective, I think is very important. And lastly, for an inflation-adjusted basis, oil prices have been a lot higher than they are today. This chart here, it's a little bit, it's a couple of days dated, but we're basically at $100 a barrel. And it's funny, 100 seems to have just a mental stranglehold on people. We're not nearly as high inflation adjusted as we were during the Ukraine invasion, not nearly as high as we were doing in 2008. But $100 a barrel, people just, I've heard this, well, at $100, everybody needs to reprice all of their products and raise the cost of everything. That probably was true 20 years ago. I'm just not as sure if it's as true today. Right? Do you need to raise the cost of a service because of a relatively small percentage of people's take-home pay being at an elevated level? The answer is probably not. I mean, there is some industries that will be directly affected. There's no question about that. But on the whole, from a whole economy standpoint, does everybody need to reprice everything because gas prices are up? The answer is probably not. And I want people to, again, put that back in perspective. So why haven't we changed our economic numbers? Why aren't we worried about stagflation? It would need to be a bigger percentage of our economy. And manufacturing, which is the primary output from oil inputs, would have to be a bigger percentage of our economy. Back in the 1970s, manufacturing was 35% of our economy. Today, it's less than 10, right? And that's not because we don't make as much, even though I've heard that a lot. It's because services have grown just so very, very much, and they're easier to grow and scale much more quickly. It's one thing to produce a plane. It's another thing to fly it around the country for the next couple of decades and make a lot. I mean, that service piece is very, very important. So when we look at, the whole perspective as a percentage, some of the quick math that people have been doing, some of the, well, we saw this in the 1970s, or we were worried about this 20 years ago, so we must be worried about it today. A lot of those things have changed. And I want to put that back into perspective for people. That's why we haven't panicked about our economic outlook. That's also part of the reason the market seems to be overly resilient and not responding as quickly to some of these oil shocks as people expect. And most of the oil market seems to still think that oil will eventually go through the strait. And oil prices will actually be down come the end of the year. So with that, I'm going to conclude. I'm going to talk about The Undiscovered Country. It's a fantastic book about the conquering of the American West. From the pre-revolutionary era, basically up until the early 1900s. With that, thank you for joining me today. I hope this was very informative, and we'll see everybody next week.